Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you all to yet another promising edition on the Extra Speed Live. Before we kickstart today's trading session, let's quickly run through our daily routine just to confirm that we are all on the same page. So if you can see my screen right now and you can hear my voices loud and clear. I said voices, my voice loud and clear. Please let me know in the comment section by typing in hi. Your highs will give me a positive feedback that we are good to go this morning. Thank you very much, guys. Um, all right, I look forward to your feedbacks, please. Thank you. All right. I can see a handful of comments right here. Thank you very much, Carrie. I really appreciate that. Happy Friday to you. Happy Friday to everyone in the house too as well. Leonardo Divi, my friend, good morning to you. Glad to have you around. And I think we are good to go this morning. And it's on this note, I welcome you all once again to yet another insightful edition of the Extreme Speed Live, your daily dose of financial insights and trading strategies. Today is another day, and in fact, we are heading into the last trading day of the week, which always comes with its own peculiarity. And of course, on last trading days like this, we usually expect that major key players in the market will be rounding off on their trading activities ahead of the weekend. And as a result of this expectation, it is very likely that we begin to see price action move in the opposite direction of the prior leading price action, resulting into what may be some profit taking activities. So today we are going to be taking all this into consideration while we review the current market structure from a technical standpoint using our basic tools such as trend lines, key levels, and of course chart patterns to unravel the potential trajectory of price action today. So I encourage us all to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on. Well, this week we had about four financial assets which we have been monitoring since the beginning of the week, including the US All Spot, the US Tech 100, popularly known as the NASDAQ. We also had the AUDUSD, which was introduced to us by Steamroller. And of course, finally, my favorite asset, the XAUUSD, popularly known as the gold spot. Well, this week has been a little bit of challenging, as you all know how the market across board has been range bound due to the indecisive nature of market participants this week. And of course, we know why that was because of we had this week laced with a series, let me say, handful of high impactful events that major key players wanted to wait on before making any aggressive bets. We have the from Jado, we have the S&P Global, we have the initial jobless claim count from the US. We also had the GDP data, all of which were key factors that was allowing market participants not to take aggressive bet. But I have this strong feeling that today it promises to be an exciting one, as we might likely be seeing some big traction today as market participants round off their trading activity today. So let's see how things is going to be happening today. And for those of you who joining us for the first time, I'm always excited to have newcomers in the house. I'm very glad to have you around with us this morning. And I know you will be wondering what this is all about. Well, let me put this way. As technical traders, we usually gather here every day in anticipation of both of the New York session, where we prepare ourselves and of course review our existing positions as well. Now, the session officially kickstarts 11 a.m. West African time, 10 a.m. UTC. So I encourage you to stay tuned in so you don't want to miss out on any of the ideas we have today. And always remember that my aim here in this community is to equip you with the knowledge and skills necessary to make your own informed trading decisions independently. Now, trust me, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So, once again, I extend a warm welcome to you and of course encourage you to actively engage in the comment section. So with that being said, here we shall be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be affecting the market sentiments today. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, for this week so far, we had a lot of high impactful events, and in fact, based on the asset we have on our watch list, we have been focusing on both the United States and the Australian economic docket. Now, for today, I would like to include the medium impactful events so we can have a broader perspective into what majority will be looking out today. Now, before I go into today's economic features, let's quickly run through what really happened yesterday, which has also played a major role in determining our market participant plan ahead of today. And one of the major one that came in yesterday was the gross domestic product annualized for quarter four from the United States economic docket. And we had a very impressive data which further emphasized the resilience of the US economy in the last couple of weeks. And the GDP data portrayed an expansion of about 3.3%, way beyond the expectations of 2%, giving us a positive deviation of 3.49. And in fact, though the data did not go beyond the previous data, which was at 4.9, but it shows us that there was an expansion in the United States. And coupled with other data from in the last couple of weeks, it more or less shows a clog in the wheel of the expectation of an early rate cut as early as the month of March. And as it is right now, market participants are caught within either expecting a rate cut by the month of March or probably being pushed back into the month of May. So there is a dichotomy at this moment, which further incites the prevailing indecision in this market. So as a result of this, market participants will want to look forward to today's economic feature from the United States to give an idea of the better timing for the Federal Reserve. And what we are looking forward to today is the core personal consumption expenditure price index, an index here which is the preferred gauge for inflation, the Federal Reserve preferred gauge for inflation. Now, for those of you who do not know what the core PCE is all about, well, this is an index released on a monthly basis by the US Bureau of Economic Analysis, and of course it measures the changes in the prices of goods and services purchased by consumers in the United States. Now, the core reading excludes the so-called more volatile food and energy components to give a more accurate measurement of price pressure. Generally, a high reading is considered as a good thing for the US economy, hereby dovetailing in positive traction in favor of the US dollar, while a low reading is considered as negative. Now, if we look at the previous data, we see here that the previous month, November, came in at 0.1%, and we have consensus based on what is on ground right now projecting a 0.2%, which is a little bit higher than the previous data, and this may likely incite the a positive traction in favor of the US dollar if the data today comes in as beyond expectation, which of course may likely incite the policymakers to probably leave the current interest rate unchanged, or maybe hike the interest rate. So this is the dynamic we had today, and based on this data we have here, we shall be scaling right into the charts to see things from a technical standpoint. If we can identify any chart patterns and structures that we will be using to strategically position ourselves for the next move. So please stay tuned in. You don't want to miss out on these ideas, as market participants are expected to be rounding off their trading activity today, and I'm of the opinion that we are likely going to be seeing some major traction after we have struggled throughout the course of the week. So time to dive right into the business. So I see your comment, Roy99. Glad to have you around this morning. Good morning to you. All right, so the first asset we are going to be looking at this morning is going to be, as usual, the US Oil Spot. And on the US Oil Spot so far this week, we have done pretty well on this asset, as we have kept on buying and kept on adding more positions to maximize the potential of this bullish move. And if you remember vividly, we had this ascending trend line, which in fact has consistently and uniformly guided our trading activities since the beginning of this week. And at no point in time did we see price break down this ascending trend line to further emphasize the strength of the buyers in this market. So all of these are all technical perspective, and coupled with the fundamental factors behind the scenes, it was more of buying this asset. For the sake of those who missed out on our earliest sessions, let's quickly run through how the week started for us all in this community and what led to the decisions that we made during the course of this week. Now, at the beginning of the week, we had a range identified, as we saw price action confined within the $73.35 level and the $72.80 area to emphasize the prevailing uncertainty in the market at that particular point in time. And of course, you know how we use our ranges whenever we identify them on our market structure. We want to be exercising patience, waiting for signals to come, either in the form of the breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. Now, prior to our live session on Monday, we did saw this engulfing bullish candle springing out of that $72.80 zone to give us the chances that buyers may want to be taking over this market. Now, with our buy stop order sitting above the $73.35 level, we had our first buy position for the week triggered, and since that moment we have been buying this asset. Remember, we did projected multiple levels here where we said if price will break out the structures, we will be adding more positions to our existing trade. So we had the $73.80 level, we had the $74.50 level, and of course finally we had the $75 area to maximize the potential of that bullish move. And of course, it was a very good start to the week. We moved our stop losses accordingly, and we were taking out at a minimum of 200 pips in profit on the first trading day of the week. And well done to everyone who capitalized on that opportunity. Now, moving on into Tuesday's trading session, we begin to notice how buyers were finding it difficult to break out of that area within the $75.40 level, and of course the key level at the $75 area. And while buyer was trying to break out of the structure, we saw how it failed the second time, and we indeed projected the possibility that we might be seeing a reversal setup as we notice a double top structure, as you will see here. And with our neckline of the double top structure marked out around the $74.50 level, I did mention here that the breakdown could turn out to be a short-term retracement in anticipation of the next wave of bullish momentum. So I said here that I wouldn't be taking this one, but for those of us who are feeling comfortable taking counter trend opportunities, or if you are a scalper, you might want to be capitalizing on the breakdown of that structure. And as we saw here, price action did break down, and in fact it moved over 100 pips in our favor before the bullish momentum started again. So for those who capitalized on that, well done. But for those of us who waited for price to continue the momentum, well, on Wednesday's trading session, after the API data was confirmed, which came in at a phenomenal low, which further emphasized the increase in demand for this asset. We were of the opinion that we shall continue to look out for buying opportunities on Wednesday. And to position ourselves for this bullish opportunity, we had some multiple levels we identified here. One of them is the $74.50 area, where we said if price does break out of the structure, we will be buying this asset. And I did mention that we should give enough breathing space for price action to move around, moving our stop loss to the previous low around the $73.80 level to capture any form of volatility that will happen around that area. Then we also marked out this descending trend line to further emphasize the strength of the sellers, but we said if price will break out of this descending trend line, this will be more good opportunity for us to capitalize on the uptrend continuation. Then we had multiple levels like the $75 area. We also added more, we also added more at the what's it called again, this $75.40 level right here. Then during our live session yesterday, we acknowledged another level at the $76.30 area, where we said we shall be adding more position. And as you will see, price moved significantly well yesterday, moving another 100 pips plus added to all of the other positions we were holding since Wednesday's trading session. So the second half of the week too was quite tremendously profitable, as we were able to scoop in a minimum of 300 pips in profit. And in fact, if you had moved your stop losses accordingly, like we always preach in this community, whenever price moves significantly well, move your stop losses and give enough breathing space. If you had done so, well done to you, as you must have been taken out on from all buy positions at this juncture. So once again, well done and kudos to everyone who capitalized on this profitable journey. So the USOILSPOT has been very, very good to us for this week, and let's see how we intend to capitalize on the next phase as we round off this week's trading activity. Now, before we go into the higher time frame to have an holistic perspective into what is going on in this market, I would like to share with you some fundamental factors behind the scenes that has been affecting this asset so far. Well, we all know a lot of various factors have been running through behind the scenes for the emphasizing the ascent of this price, and one of them was is the geopolitical tensions in the Middle East, the escalating tensions. We saw how the United Kingdom and the United States had joint military attacks on the Yemeni Houthis rebel in the last 2 weeks now, and this has further incited the concerns as regards to oil disruption from that particular area. Then one interesting thing happened yesterday as we saw speculation surrounding the People's Bank of China potentially considering a medium-term lending facility rate cut has contributed to this momentum too as well. We also had how the People's Bank of China's governor announced a 50 basis point reduction in the required reserve ratio, usually known as the RRR, set to take effect from the month of February, I think on the 5th or so. Now, for those of us who don't know what this simply means when we say a reduction in the RRR, well, in the banking terms, it means that the banks are required to hold less money in reserve, allowing them to have more funds available for lending and other investment. So in simple terms, it means that the central bank is injecting liquidity into the economy by freeing up more funds for banks to use. This move is intended to stimulate economic activity, encouraging lending and supporting various financial markets. Now, with this scenario, we had also that the People's Bank of China will be injecting about a trillion Chinese yuan extra funds into the economy, and of course this is going to boost the liquidity in that sector. Now, one good news for oil buyers is this: China, being the largest oil importer of crude oil, experiencing such development will significantly influence the global oil market. Now, this for me is a positive sign for buyers in this market. Now, the question is, when will the bullish momentum start the second wave? Now, another factor that is supporting this ascent is the decrease in U.S. crude oil stockpile that was reported during the course of the week by the Energy Information Administration, which has also further boosted the oil prices too as well. And then we also have other weather conditions which have disrupted crude oil production and transportation, particularly in North Dakota in the United States, leading to fluctuation in inventory levels. So in light of these factors, it makes quite a lot of sense that we continue to look out for buying opportunity. Now that market participants are eagerly anticipating the release of the US personal consumption expenditure price index later today, this will affect the market dynamics, of course, but how is the market going to be anticipating this event, let alone talking about how it's going to react to it? Now, in that perspective, we shall be scaling up into the daily time frame where we want to see things from a technical standpoint before projecting ourselves for today's trading session. Now, looking at the structure from the daily time frame, of course, for those of you who have been with us for a while now, you will be familiar with the structure we have on the daily time frame. So what we did on the daily time frame was to take into consideration the nature of price action since the month of October, as you will see here. And what we indeed noticed was how price action has been very, very bearish. And when we connected the series of lower highs, we have a descending trend line which further buttressed the strength of the sellers at this point. Now, something interesting began to happen during the first week of the month of December, and despite the strong bearish momentum, we saw how it became difficult for sellers to break through that zone, around the $68 and $70 area. Now, this was a sign that buyers may likely be gaining momentum as market participants in this environment might be seeing that level, that price zone, as cheap enough to buy the US All Spot. Then this also continued in the month of the first couple of days of the new year as we saw another higher low, giving us more signs that buyers may gradually be gaining momentum behind the scenes. And one other thing that made us feel more confident to join any bullish opportunity was the transition of price action into a potential reversal pattern in the form of a double bottom structure. And with a double bottom structure in place, we have our neckline, which interestingly is lining up exactly with our key level for the week at the $75 area. And of course, you know how we treat our reversal patterns. We want to see price break out of the neckline to help us validate the potency of that pattern. And one other interesting thing about the neckline is how it beautifully shares a confluence with that descending trend line. So if price breaks out of the neckline, price will also have broken out of the descending trend line, which is a good sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And as you will see, what has been going on since the beginning of the week, we have been buying this asset, capitalizing on both the breakout of the neckline and of course the descending trend line to further maximize the potential of this bullish move. Now, as it is right now, you will see that price action is now at the top of the neckline at the $75 area. Now, going into today's trading session, how do we intend to join or capitalize on the next move? Well, first of all, price has broken out of the neckline. The question now is, are we going to see price do a retracement back into the $75 level in anticipation of another wave of bullish momentum, or is there going to be an uptrend continuation pattern formed somewhere around that area? Hold on a second, let me show you. Form somewhere around this peak here for this week before another wave of bullish momentum will happen. So we are at a very crucial juncture at this point in time. We are depending on what happens around that $77 zone will determine what our next line of action would be for today. Now, with the information we have gathered here on the daily time frame, let's scale back down into the 1 hour time frame to position ourselves for the next move. Now, this morning, let me zoom in so we can see things very, very clearly. So this morning, while I was trying to decipher what the market participant may likely do today, especially today being the last trading day of the week, are we going to see a trend continuation, or are we going to see a situation where market participants will start closing in their position around enough trading activity ahead of the weekend? Because this market right here is very sensitive and we do not know what may happen during the course of the weekend, and it is very possible they want to be closing in their position, which might reflect on the chart as a retracement phase. Now, the first thing here is the fact that price still remains above our ascending trend line. Remember, let me mark it out so we can see it clearly. So we have our ascending trend line, which of course has been supporting this momentum since last week Wednesday, as you will see here. And of course, you know how we use our ascending trend line. As long as price remains above the trend line, we shall continue to maintain a bullish bias. Now, as it is right now, you will see that after price tested a new high around the $77.40 level, we begin to notice a retracement move as buyers found it difficult to break out of that level during the early hours of the Asian session. Now, the question right now is, will price action retrace back into the ascending trend line to incite another wave of bullish momentum? That is one scenario we are looking at, or probably break it down to the downside, maybe to incite more sell-off back into this descending trend line that was broken on Wednesday's trading session before another wave of bullish momentum will happen. Or are we going to be seeing an uptrend continuation pattern that will lead to the breakout of the $77.40 level to welcome more buying opportunity? So to help us answer this series of questions, I have a temporary trend line after considering the nature of price action in the last 24 hours. As we saw a deviation from the major trend line, as you will see a newly identified trend line right here. Now, will this trend line continue to maintain the bullish momentum, or is price going to break down this trend line? Well, I had a zone during the early hours of the day which I duly marked out. As I saw, since the Asian session began, price action was trapped and confined within the $77 area and the $76.60 level to emphasize the indecision that was going on in the market at that point. And one interesting thing is how price action was ranging just right around that temporary ascending trend line, though we already saw a breakdown of that structure. Now, will this breakdown turn out to be a retracement move back into the structure, which will be dovetailing to a minimum of about 120 pips to catch here? Well, let's see how to do that. Now, for me personally, if you would Oh, sorry about that, please. So, like I was saying earlier, so now at this point, we're at a very crucial juncture where price action shares a confluence with the ascending trend line, that is a temporary one, and that support line of that range we identified earlier. So, if we are going to be selling this, well, for me, I'm not going to be doing that. But if you're a counter trend trader, or a scalper who is willing to take advantage of short-term trading opportunities, well, price has just broken down both the ascending trend line and the $76.60 level. Now, a retest of structure will be a beautiful opportunity to join a counter trend, maybe back into this major ascending trend line where, depending on how price reacts to this trend line, will now determine if we are going to be adding more sell position, that is a breakdown retest of the ascending trend line will now welcome more selling opportunities, or if the buy pressure resumes around this area in such a way that price transitions into a reversal pattern like a double top structure, inverse head and shoulder pattern, or probably a falling wedge, we just mark out the neckline and then buy the breakout of the neckline to join the next momentum to the upside. So this is how we are going to be managing our trade if price action does a retest of that temporary ascending trend line and the $76.60 level. However, if price action continues to the upside in such a way, hold on a second, that it breaks out of the $77 area, we might be in for another wave of bullish momentum and a further breakout of the $77.40 level, welcoming more buying opportunities. Now, there is a way we can maximize this. Please note this carefully. Now, for those of us who have been profitable since the beginning of this week, we can afford to leverage on some of the profit we had made so far this week to test waters above the $77 area. So if you are in that category, just place a buy stop order above the $77 area so we can capitalize on the uptrend continuation, and then we can add more position if price action goes ahead to break out of a $77.40 level. However, if you are new with us and this is your first time taking a position, you don't have anything to leverage on, then I will advise you to exercise patience and wait for the retest of the structure before jumping into that buy position. And please make sure you have enough breathing space for price action to move around, allowing your stop loss to be way below the $76.60 level, which will be dovetailing to between 40 to 50 pips thereabout has a stop loss on that one. So on the US All Spot, we still maintain a bullish bias, but we are not negating that we could see sellers break down, retest this ascending trend line, retest the 76.60 to incite a move back into that major ascending trend line, which is more or less a retracement that may incite another wave of bullish momentum. So I hope I made myself very clear on the US All Spot, and as you will see, that temporary ascending trend line here is going to be playing a major role in determining what is going to be happening in the next couple of hours. So you want to be marking out that level, marking out that range between the 76.60 and the $77 area to guide your independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 5 to 10 seconds because I'm already running out of time here to see if there are any questions before we move on to the next asset on our watch list. So I see your comment here, Rupa India. Good morning to you. Glad to have you around with us this morning. You want me to do something on XAUUSD. I think you mentioned this during the course of the week, and unfortunately, I wouldn't be able to take on the XAUUSD basically because it is not part of the asset on our watch list for this week. So the best time for you to introduce assets for us is at the beginning of the week when we are starting the week afresh. So whatever asset you give me on Monday session, of course, we're definitely going to be monitoring that asset throughout the course of the week. So I will suggest that Rupa India, try to be around on Monday, drop any asset you want us to look at for the week, and trust me, I will include it into our watch list. I hope I made myself clear. Modak, good morning to you. Jenny Ho, good morning to you. Glad to have you around. Tisha, how are you? And I can see Brady too. Trust you guys are doing very, very well. So, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving right into the next asset on our watch list. So, the next asset on our watch list for today is the USTech100, popularly known as the NASDAQ. And on the NASDAQ, we've had quite an impressive week on this asset as we had a situation where we bought throughout the first half of this week, and then we also sold as soon as yesterday when price action broke down that ascending trend line and the 17,540 level. Don't worry, I will take you through what led to another that led to the situations that we had during the course of the week. So, and for the sake of those who are not part of our live session since the beginning of the week, let's run through this quickly. So the first thing we saw at the beginning of the week was the fact that price actually started the week on a strong bullish note. Price started at around that 17,350. But one interesting thing that happened was that as soon as price got into the 17,440 area, we begin to notice how difficult it is for the buyers to break out of that structure. And as a result of this observation, we have a range where price was initially confined within the 17,440 and the 17,350 as you will see here. And with this understanding, we were looking out for either the breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. And we had our stop orders placed at both ends, and unfortunately, though we had a buy stop order triggered here, that did not do very well at all, as we saw price break out that place a little bit and then nosedive to the downside, taking us out of that buy position in a loss. Then immediately we saw price come down to break down our support line here, triggered our sell stop order, and for about 24 36 hours we saw how the sell position struggled, and because of the appearance and emergence of buy pressure around this zone, we begin to doubt that sell position. And what I did say, remember vividly, I said move all your stop losses on your sell positions to break even, and we shall be getting ready to buy, as we can see that sellers were finding it difficult to break through the 17,300. Now, to position ourselves for that buying opportunity, we had this level marked out, had the 17,360. As we said, a breakout retest of the structure will be all we need to join an uptrend continuation. And thank goodness on Tuesday's trading session, we had our buy position triggered and it did very well. We had multiple levels. We had a 17,440, and right here on Wednesday's trading session, we added another level, had a 17,540 to maximize the potential of this bullish move. And we had about 3 buy positions as at Wednesday's trading session, giving us over 300 on the first one, and the second position was running about 220 pips, giving us 520 plus. And then we have the third position at about 120. So we were begging into around 620 pips in profit on the USTech100 before the bearish momentum came in. And of course, you know how we do it. Whenever price moves significantly well in our favor, we move all stop losses and secure the position. And if you had done that correctly, we were taken out of that position with a considerable amount of profit. Now, during our live session yesterday, we talked about the retracement. Remember, we saw this retracement to the downside here, and we said here that the inability of sellers to break through at this point may be a sign that buyers are trying to continue the momentum to the upside. And to help us guide our trading decisions for yesterday, Thursday's trading session, we had this ascending trend line highlighted. Remember, we had this ascending trend line highlighted, and we did agree that as long as price remains above the ascending trend line, we shall continue to look out for buying opportunities. So we had the 17,540 marked out to looking out for buying opportunity, and in fact price triggered that position, and we saw price move about 80-90 pips thereabout before the bearish momentum came in. And I trust you moved your stop losses. If you had done so, you must have been taken out with a reasonable amount of profit, or at a worst case scenario, break even. And one of the things we projected here yesterday is that if price breaches this ascending trend line and breaks down the 17,540 area, retest of structure will be giving us an opportunity to sell. And look at what happened about 5 hours into the New York session. We saw the breakdown and retest of the 17,540 and the ascending trend line to welcome a selling opportunity. And if you are taking advantage of that one too, well done to you. If you still have your position running, you're currently having about 120 pips in profit at this point in time. So at this juncture, it is very, very important that we move all our stop losses on the sell position to secure this current move while we continue to monitor price action. And if you would ask me, I would suggest that anywhere around and above the 17,440 area seems most appropriate to move all stop losses to while we continue to monitor price action. Now, with the situation we have and with a well secured position, what is going to be our next line of action for today. Now, remember what I said here during the course of the week as regards to price action finding a new high, that whenever price finds a new high like this, it usually takes some time before price action gets acclimatized to that zone to before it continues the uptrend scenario. And because of this time the price needs, we usually see the emergence of the emotions of fear grip participants in this market, which will make them want to be closing in some of their profits on from the chart, and this usually reflects on the chart as choppy situations, consolidation phase, or even retracement moves to the downside. And this is what has been characterized with this market in the last 48 hours. As you will see here, price has been choppy and of course has gone through a retracement after breaking down that ascending trend line. Now, as it is right now, how do we intend to position ourselves for the next move, especially on a day like this, which happens to be the last trading day of the week, where we usually see market participants round off their trading activities ahead of the weekend? And because of this, we usually expect price to do a reversal, moving in the opposite direction of the prior leading price action. And of course, you will see where this current bullish momentum started from. It started from the 17,360 and 17,300 zone, as you will see right here. So what I will do now is to identify this zone as a demand zone. Of course, this level had played a major role in pushing, negating all attempt by the sellers to break through that structure. So let's mark out this level appropriately. I like to give it a darker color, and then we will label it a demand zone. Should I call it a temporary demand zone? Okay, let's call it a temporary demand zone. And then this is between the 17,340 and the 17,300, right? So we mark that one out, 17,340 and then the 17,300. I hope we make ourselves clear here. So we give it a white color, and then I love to place it right inside the box. So let's center it, and here we go. So right now we have a demand zone. This is exactly where price started this bullish momentum we enjoyed in the last 3 days or so. Now price is back into that structure, not even back into that area, just a little bit above the zone, just around the 17,360. And what we saw here is the emergence of another buy pressure. As you will see here, in the last hour we have an engulfing bullish candle springing out of that particular structure. And what does this tell us? Well, I'm suspecting that we might be in for another wave of bullish momentum. So let's see how the market is going to react from this particular point in time. Personally, I think that price may want to continue the bullish momentum from this level. So we do want to be looking out for patterns that will help us guide that decisions. Now, what I want to see here is maybe price may do some retracement back into this area, and if it is unable to break down the previous low, then we might be having a reversal setup on our table, which may look something like this. Let me give you a visual representation of what I'm talking about. We have the first touch, price comes back, and if price finds it difficult to break down the previous low here, we have a double bottom structure. I'm just saying it could be a head and shoulder, it could be a falling wedge, but most importantly, when we identify a reversal pattern, we mark out our neckline and then buy the breakout of the neckline, then to join that uptrend move. Now, there is a caveat to this setup, this bullish setup we are talking about. Now, if we buy and price continues to climb new highs, please note that price broke down this ascending trend line yesterday, and there is a tendency for price to come back and retest the trend line to incite another wave of bearish momentum. So we shall be marking out these levels. We have a level right here at the 17,540. Then we will also mark out this level right here at the 17,610, I guess. So we marked out that level 2 as well. 17,610, which is closer to that ascending trend line that was broken down yesterday. Now, if price gets into the zone, please, we will move all stop losses on the buy position, secure the current buy position, and exercise patience to see how the market is going to be reacting to that zone. Now, if we see that buyers are finding it difficult to break through and instead we started seeing selling pressure, then this may likely incite a sell-off in the market. So if we see a double top, head and shoulder, whatever it is, mark out your neckline and then sell the breakdown retest of that particular structure. But if price breaks out and continues to climb new highs, then a further breakout of the 17,660 right here will welcome more buy positions in our existing trade. So this is how we are going to be managing any bullish opportunity above that demand zone we identified here. Now, if the case that happened is contrary to what we just said now, and instead price continues to drop to the downside, taking out this demand zone, something like this, then I'm of the opinion that price may want to continue to the downside, and a retest will be a beautiful confirmation to add more sell position to our existing trade. So as it is right now, we have a crucial juncture right now where price is currently trading above this temporary demand zone we did identify here. So we shall be using this as a yardstick to guide our trading activities going forward. If price remains above the structure, a reversal pattern is all we need to join an uptrend move, and if price breaks down the structure, then obviously we shall be getting ready to sell the USTech100 today. So this is my simple view here. If you have any questions whatsoever, feel free to let me know in the comment section. I think that is that for today on the USTech100. Let's see how this will play out, and I'll take the next 5 seconds off to see if there are any questions because we're running out of time already. All right, guys, so let's see if there are any questions before we move on to the next asset on our watch list. Hello, Nathan. Good morning to you. Mono Mix. Good morning to you. All right. So, in the absence of no questions, I want to assume that we are all on the same page. So let's move right into the next asset on our watch list. All right. So the next asset on our watch list was introduced to us by Steamroller on Monday morning, and I'm not sure if Steamroller is in the house. Well, we've been monitoring this asset since the beginning of the week, the AUDUSD. And on the AUDUSD, we had a couple of economic features from the Australian economic docket too as well, which of course churned in some very impressive data to show the resilient nature of the Australian economy. However, the US dollar was outshined the AUD USD in terms of economic features, as we saw from the S&P Global, the initial jobless claims, the GDP data, all churned out figures that were beyond all market expectations, further affirming the strength of the US economy. And this, of course, has exerted some downward pressure on the AUD USD. So this didn't allow the AUD USD to grow as expected based on the data that came in from that economy. Now, there are some other things that also happened where we saw the AUD shows signs of continued strength against the US dollar during the course of the week, despite lower US Treasury bond yield. The positive performance in the last 24 hours has to do with the positive influence of the copper and iron, along with potential support from additional stimulus measured by the People's Bank of China, which of course has contributed to um, the the excitement in this market. However, the Reserve Bank of Australia also expected to reduce borrowing costs later this year, possibly delayed by changes to tax cut packages. Now, the US dollar may capitalize on recent gains following better than expected US GDP data with US Treasury bond uh, yields. But one thing I would like to say here is that pending the time that the CPA data will come today, we might see a traction in favor of the Australian dollar. Now, the US Treasury Secretary Janet Yellen yesterday expressed some confidence in the economy's performance, and this is also limiting the growth of the of the AUD at this point in time. But from a technical standpoint, we did identify some couple of factors here that we said will be guiding our trading decision, and these factors here negated any idea of considering selling this asset. And one of the factors we did identify here during the course of the week was this temporary demand zone around the 0.65675 and the 0.65500 area, as you will see right here. Now, this area has been serving as a temporary demand zone in the last since the beginning of the week, actually, as we saw that despite the strength of the US dollar, that zone had continued to negate all attempt by the sellers to break through that area. Now, in addition to this demand zone, remember that we also spotted an ascending trend line yesterday after capturing the pivot lows since last week Wednesday, giving us a beautiful ascending trend line to work with. And if you remember vividly, I did mention that as long as price remains above both this ascending trend line and that demand zone, we shall continue to look out for buying opportunities above the 0.65825 level, which is right here. So we said we are only going to be buying anywhere above the structure, as you will see right here. And I did mention that we should allow our stop losses to give enough room for our stop losses to capture any volatility that could happen. Way below the ascending trend line was making quite a lot of sense there, dovetailing to between 15 to 20 pips stop loss on this one. And then we had multiple levels where we said we will be adding more buy positions if price action continues to climb and find new highs here. And as you will see, we already have two buy positions running at this point. Let me zoom in so we can see things clearly. So we had the first buy position triggered at the breakout of the 0.65825, and then added another one at the 0.65950, which has already been triggered about an hour ago. So let's see how far this momentum is going to go. So if you would ask me right now, I would suggest that you move all stop losses of this buy position to somewhere around that first entry, and while you also give enough breathing space for price action to move around. So let's see if this momentum will continue to the upside. So nothing complicated here on the AUD USD at all. And if you remember that the only condition that will make us to sell the AUD USD this week is for price action to take out that buy positions around that zone we identified as a temporary demand zone, and the lowest point here is the 0.65500 area, which if price can break down, retest this lowest point, it could be a very good opportunity to sell. However, I did mention that we could actually see an opportunity to sell even before that breakdown happens. And one of the criteria we are using to guide that is if price will breach this ascending trend line, break it down, then retest of structure, and we begin to see significant price movement fortifying the fostering selling pressure like series of lower lows and lower highs on our lower time frame. We can capitalize on that one, then have a sell stop order below the 0.65500 level. Of course, this never happened at all, hereby negating any consideration of selling this asset at this point in time. So we shall continue to maintain that bullish bias as long as price remains above that ascending trend line. So I encourage us all to mark out these levels, as you will be needing them as a reference point to guide your independent trading decisions on the AUD USD. So this is my simple view on this asset. I do hope I made myself clear, but if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take some 5 seconds just to see if there are any questions before we move on to the last and final asset on our watch list for today. All right, so in the absence of none, let's move right into the final and last asset on our watch list. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot, we for the first time in a very, very long time, we didn't do very well on this asset for this week, as we saw due to the choppy situations in the market, which of course was emphasized by the range bound trading activity throughout the course of this week. As you saw, that price was trading more between the 2032 and the $2019.50 level to emphasize the prevailing indecision that has gripped the market since the beginning of the week. Though we had some couple of buy positions during the course of this trading phase, which unfortunately went into a loss for us during the course of the week before price action broke down this ascending trend line for the first time in a week, I think, to signal that bearish opportunity, which incited some, let's see how many pips move here, about 150, and while the second one triggered about 80 pips thereabout before this bullish momentum came in on Wednesday. And since then, we saw how it has become difficult for sellers to break through that temporary demand zone we identified within the 2011 and the $2013.50 area. Now, with the way things are going, we saw what happened yesterday. We said here that we will continue to maintain a bullish bias here, and in fact we did identify a level here at the $2019.50 area, where we said we shall be capitalizing on that uptrend move right here. And of course, we saw price trigger our position, and currently the buy position from yesterday still remained very active, running with a profit of about 45 pips at this particular point in time. And for those of us who did capitalize on that one, well done to you. Let's see if we will be able to recoup some of the losses we made during the course of the week on this particular asset. Now, it is very necessary that we also understand what has been going on behind the scenes, and we talked about this countless of times during the course of the week. And let's give a summary of what we said is guiding the challenges that is facing the momentum in favor of the gold asset. Now, we talked about the current geopolitical risk and uncertain global economic outlook, which has continued to give support to safe haven asset. If not for these, the safe haven asset will have dropped significantly to the downside. And also, the possibility of a delayed Fed rate cut has limited the potential gains as well, especially with the upcoming release of the US PCE price index, which we all know is the Federal Reserve favorite inflation gauge to decide if they are going to be reducing the rate cut as early as the month of March or not. Now, at this juncture, market participants may have to wait on the sidelines in anticipation of the US personal consumption expenditure index scheduled for later today. Now, this inflation data, like I said earlier, offers insights into the Federal Reserve's future policy decisions influencing demand for the US dollar and providing significant momentum for safe haven assets such as the gold. Now, well, if you would ask me, I'll still maintain a bullish bias. In fact, the geopolitical tensions in the Middle East and the uncertain global economic landscape, for me, still bolsters the appeal for safe haven assets such as gold. Nonetheless, the decreasing likelihood of a more aggressive Fed policy easing in 2024 is restraining the bullish traders from making any new aggressive bet on the gold. So as it is right now, and considering these factors, the current market phase appears indecisive, prompting participants to await significant signals before making any decisions at this point. So our best course of action right now is to exercise patience and rely on our technical structure as a guide for identifying trading opportunities for today. Now, how are we going to use that? Well, it's quite simple. It's a very, very simple setup we have here. But let me quickly take you through the 4 hours time frame so we can all have an holistic perspective into what is going on in this market, and for the sake of those who are not part of our earlier editions. Now look at the 4 hours time frame on your screen right now, and the first thing you will observe since the mid-month of December is the fact that that area within the 2005 and the $2015 zone had played a major role in negating all attempt by the sellers to break through the structure. And this for me is a very good signal that buyers still have a say in this particular market. So we have that area identified as a strong and robust demand zone. Now, secondly, since the beginning of this year, it has been more of profit-taking activities as price action dropped from the highest point. It got to at 2086 to the downside, which of course led to the transition of price action into a descending technical structure. Now we saw, after connecting the series of lower highs here, we have the resistant line of the descending channel, and then when we connected the series of lower lows, we have the support line of that descending channel right here, and immediately price tested the support line of the descending channel right here on Wednesday's trading session, right within our key level for the week. Had a 2005, we saw price climb back into the resistant line, and as soon as it got there, we saw price drop again. But now, since Wednesday's trading session, we saw that price is back into that demand zone. And for me, I think that area is so strong that sellers are finding it difficult to break through that area. Now, as it is, and as long as price remains above this demand zone, I still have a strong faith that price may continue to the upside. So I needed you to see what things are looking like on the higher time frame so that we can all be on the same page on the 1 hour time frame. Now, scaling back down into the 1 hour time frame, let's see how we intend to position ourselves for the next move. So currently our buy position is still very active, and we have our temporary demand zone marked out. And one thing I will just say here is that as long as price remains above this temporary demand zone, we would not consider selling this asset at all. Now, if we are going to continue the uptrend and price continues to break out multiple levels, remember we have the 2026 where we shall look out for more opportunities to buy if price break out of this level. We also have the 2030, and of course we have the $2039.50 level as well, which of course I also have a buy stop order above that structure to maximize the potential of this bullish move. Now, this is where the caveat comes in. Now, we have this ascending trend line here, which was broken right here on Wednesday. Let me highlight it out so you can see. We have the ascending trend line right here. And then we have the resistant line of the descending channel we identified on the higher time frame right here. You can see how they share a beautiful confluence, right? So if we are joining this bullish momentum and price continues to climb up, as soon as price gets into that zone around this area, please let's move all our stop losses to secure the current buy position while we exercise patience and wait to see if the market will break out the structure. If it breaks out of this confluence, then we want to be looking out for more opportunities to buy, adding more buy position as price finds new high. But if buyers find it difficult to break out of the structure, well, we might be seeing a retest or respect of the resistance line of that descending channel we identified on the higher time frame to incite a sell-off. So if buyers find it difficult, we may see a reversal pattern here. So if we can identify maybe a double top, head and shoulder, or a rising wedge, mark out your neckline and then sell the breakdown of the neckline all the way to the downside. So this is how we are going to be managing our expectation. If you would ask me personally, I think the price has a tendency of climbing up, and we shall continue to maintain that bullish bias. And the only condition that will make us sell at this juncture right now is for price to break down this support line here, retest it, then we could join the decline, and then a further breakdown of the 2005 will welcome more selling opportunities. So this is my simple view on the XAUUSD today. We have a buy position triggered and it's still very active right now. Let's see how the market will anticipate the core PCE later today, and let's see how it will react to the data that comes out from that event. So if you have any questions, feel free to let me know in the comment section. As always, I will take some 5 seconds off. Let's see if there are any questions before we round off on today's trading activity, trading session, of course. All right. So in the absence of no question, I see you, Panuyo621. Good morning to you. Nopo, good morning to you. Glad to have you around with us this morning. So on this note, let's round off on today. We were able to attend to 4 of the major assets we've been monitoring since the beginning of the week. I didn't see Steamroller today. Trust you are doing well, Steamroller. If you are there, let me know if you are around. So we treated the USOILSPOT, the USTech100, AUDUSD, and of course the XAUUSD, out of which we were able to identify simple trading setups that we will be using to guide our decisions for today. And I do hope you are able to mark these levels out and structures on your chart, as you will be needing them as a reference point to guide your trading decision. And if you have done so, well done to you. All we just need to do now is to exercise patience and allow the structures to mature before jumping into any positions. Well, this week has been a little bit of a more of a chopper situation as a result of the anticipation of these economic features for this week, though we had tremendously profitable day on the US All Sport and the US Tech 100, which did very, very well for us. And I think that was enough for us to be on the positive side of our portfolio. It's only for the XAUUSD and the AUDUSD which have been struggling to gain some traction since the week has begun. But it's okay, it's quite understandable. Maybe next week we will start gaining some traction, or maybe we could start doing something on them today. Let's see how the week is going to end. And of course, we shall be here again on Monday to review this asset and see how we shall position ourselves for the next week. For those of you who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of the subsequent editions right here on this platform as we come here to review and see how to strategically position ourselves for the next move. Trust me, the more time you spend with us in this community, the better you get to understand how the analytical approach works and eventually be able to use the information you gather here to make your own independent trading decisions. You guys are wonderful. I love the energy. I continue to love your energies, and I look forward to seeing more of you. Same time on Monday morning, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well we did this week, and of course prepare ourselves for the new week. I wish you guys the best of luck today. I wish you a wonderful weekend, and always remember that every decision we make in the financial market is always an educated guess until price action hits your TP target. And as a result of this understanding, you do want to be having a well-defined risk management strategy in place to mitigate against any sudden pullback that may come against us. So with that being said, I wish you all the best of luck. Have a happy weekend, and I look forward to seeing you on Monday. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.